Hello, everyone, and once again, many thanks for tuning into another of our investment videos. Today, I have the huge pleasure of catching up with Andy Brown, who's a director in the Japanese equity team at Baillie Gifford. And today, funnily enough, we're going to talk about Japan and Japanese equities. But before we start, if you're watching one of our videos for the first time, it would be fantastic if you could subscribe by hitting the subscribe button below. It's a button underneath that says subscribe, so it's not that difficult. If you enjoy the content, then please leave a like. We have a huge amount of content that comes out every week, ranging from investment videos through to financial planning, and so I'm sure there'll be something there to interest you. Anyway, moving on to today's topic. Thank you, Andy, for coming on to one of our videos once again. Starting it off, 2020, how was it for Japanese markets?
Well, pleasure to speak to you again, Andrew. Yeah, 2020 actually turned out to be not a bad year for Japanese equities markets. They were somewhere in between the US and what we saw in Europe, so didn't quite perform as well as US equities, but did a lot better than the UK and most European markets. And actually, a lot of that was delivered in the second half of the year. Mm-hmm. So there's lots to be positive about actually in Japan. Japan hasn't been damaged from a humanitarian perspective in the same way as many other countries from the pandemic. So, for example, as we stand today, there's been about 6,500 deaths from COVID-19. Now, as a reminder, the population is about twice the size of the UK, mm-hmm. And had over 100,000 deaths. So Japan hasn't been as damaged from a humanitarian perspective, which is, of course, the most important thing. Yeah. From an economic perspective, also, unemployment remains very low. We've also seen a bit of a recovery fueled by China's recovery. So China was had quite an early recovery from the pandemic, and Japan's close proximity to China has been very beneficial. So the Japanese economy hasn't performed as badly either as the UK or Europe. Lagged the US economy slightly, but that's largely because of its low levels of online penetration. Mm-hmm. And this is where we're seeing a big growth opportunity in our portfolios, as the pandemic has been a bit of a wake-up call for Japan. Mm-hmm. But overall, Japan's in relatively good health coming out of 2020, and companies are strong, balance sheets are strong, household savings are higher than they've been for quite a long time. So there's quite a lot to be optimistic about.
Mm-hmm. Obviously, that provides a very good platform for future growth. How do you think 2021 will shape up? Are we still looking at another positive trajectory?
Yes, I think there's going to be two prongs to Japan's growth opportunity. I think on the one hand, touching on that online penetration point that I've just made earlier, Japan has a big runway of growth here. Things like online retail, online services, things like software, cloud computing, and the like. Japan is much further behind the curve than many other markets and is starting to catch up. So there's a big growth opportunity there, and that will help Japan's efficiency. Efficiency in services is actually not very high in Japan. It's very high in the manufacturing side, very well known for robotics and efficient processes. But in the service industry, there's a lot Japan can do to improve. And the sort of move online will really help with that process. Mm-hmm. We're getting a lot of exposure to that within the portfolio that we run. The second point, though, is a cyclical recovery. Mm-hmm. Japan is often seen as a cyclical stock market. There are a lot of high-quality manufacturing businesses that tend to struggle when overall global demand is weak. So the likes of the big machinery companies, the semiconductor component makers, the auto supply chain, the robotics businesses, all these businesses do better when the cycle is on a positive trajectory. And we should get quite a big snapback this year. We've already had a sign of that in the final quarter of last year, but that should have some legs to it, and that should benefit Japan.
Yeah. The commentary that we're seeing globally at this moment in time is about rising inflation, the reflation trade. Will we see inflation coming through into Japan?
That's difficult to say. So far, it's been one of the big disappointments in the Japanese story, if you like. And we've had more stimulus again. We've had more stimulus globally. So I think there are grounds for believing that we'll get a bit of inflation coming through. I think what's been interesting in Japan is that labor markets have been very, very tight, but yet we haven't seen that high wage growth that we would expect to see. And I suspect a lot of that is through automation and also through low cost wages in China. And I think now that China is no longer the low cost sort of manufacturing center that it once was, that could stop the sort of deflationary pressure on Japan. So I do wonder whether now we'll start to get very modest inflation. I mean, there is this possibility Japan enters a Goldilocks period where we have a little bit of inflation, a bit of growth, but not too much.
Right.
Elsewhere, there's a bit of concern from some people that we might end up getting quite high inflation because of the amount of stimulus that we've had across the world.
No, that's a very interesting point with regards to that kind of sweet spot there. Taking everything into consideration, what you've mentioned, have you been making much in the way of changes to the portfolio?
So turnovers remain low, and we're confident in the overall positioning within the fund. Although what we have been trying to do is look for opportunities of businesses that have suffered during 2020 in a kind of one-off scenario, but have long duration growth ahead of them. And that led us to a couple of new holdings. So one is the tire manufacturer Bridgestone, will be well known to many people. And there the story is that tires have very low levels of obsolescence risk. It's hard to imagine us not having tires for cars. They're agnostic to the drivetrain. It's a very durable business model. Japan, through Bridgestone, has a very strong position. But last year was a terrible year because there were fewer miles driven. So cyclically, it was very difficult, and the valuation has come in significantly, giving us an opportunity to buy that one. Similarly, Recruit is Japan's leading recruitment business, but it's increasingly well known for having the leading online player called Indeed, that it acquired some time ago, and it has a very high growth trajectory. But recruitment was a tough market to be in last year, obviously, during the pandemic, during a downturn. The valuation has also come in quite a lot in a stock that's been quite highly rated for some time. So these are two opportunities that we took advantage of. We see them as very long-term growth stories, but it's just a chance to buy them at a lower price after a difficult year.
Yeah, and I'm assuming the long-term approach that you have, that still stays with regards to the proposition, and there's no change in that whatsoever.
No, not at all. And when we look at the sort of bulwark of the positioning, which is sort of internet platforms, disruptors, high quality franchises, most of these businesses have been in the portfolio for at least 5 years, some over 10. And we expect many of these holdings to remain common features in the fund for some time.
Yeah, fantastic. Once again, Andy, it's a pleasure to speak to you. The performance has been fantastic. It's been very, very consistent, and certainly, we thank you. Our clients thank you for that consistency of performance. You take care, and I'm sure we'll catch up soon.
Thank you very much. You too. Pleasure to talk to you.